So what you think you know about analyzing real estate is going to get you in trouble if you're looking to scale into apartment buildings and you're using a single family house method. So if you can't apply single family principal strategies or techniques to multifamily, especially in deal analysis, because I can almost guarantee you that you'll end up making a big and expensive mistake if you do that. So then how should you approach multifamily as a single family investor? So stay tuned. In this video, I'm going to talk about some of the differences between analyzing rentals and flips versus multifamily. So let's get into it. Hey, my name is Michael Blanc, and I help people become financially free with real estate. So maybe you're familiar with the 2%, 50%, 70% rules, right? 2% rule for rentals. The rent should be 2% of the purchase price. That means that the rental is actually a pretty good rental. 50% rule, assuming half of the gross income goes to operating expenses. The 70% rule is for flipping. Pay no more than 70% of the after repair value minus repairs, and that's got to be a strike price for flips. So you may be familiar with those, but commercial real estate is different. They don't really apply, so you try to apply these rules, and it's not going to make a lot of sense. And so as a result, people get overwhelmed with the idea of actually analyzing commercial real estate. They're like, oh, I don't know how to do it. It's too complicated. And then some people actually try to do it, and then they make mistakes because they use the rule of thumbs for trying to apply to multifamily. Now, I remember when I first started getting into apartment buildings, and I come from a house flipping. We flipped 3 dozen houses and had some rentals as well. But then I quickly realized that the rules that I learned and applied didn't actually apply to multifamily properties. And it took me a minute. In fact, I was pretty much stuck because it took me a long time to analyze deals. I was making a bunch of mistakes with the analysis. And then at the end of it, I wasn't sure if I was doing it right. Are the numbers actually accurate or what? And I wasn't really sure. And so I then discovered the right way to analyze multifamily properties. And that really changed everything, because if it takes me 4 hours to analyze an apartment building deal, there's only so many I can do, right? And as you know, real estate is a numbers game. And today, with a technique I'm actually going to share with you here in this video, we can do it in 10 minutes, right? Which means that you get a deal in from a broker, and you can quickly gauge, hey, what is the actual value of that deal? So what really changed then? First, I realized that commercial real estate is valued differently as single family house. You can't use the same techniques that I learned and applied from residential commercial. So let's talk about how commercial real estate is valued, right? So all commercial real estate is valued in a similar way because it is basically valued like a business, like a cash flowing business. And so the value of the business is essentially the net operating income minus the cap rate. So in order to understand these, let's talk about each of these components. NOI is pretty straightforward, net operating income. It's the income after all expenses are paid, but before debt service, so before the mortgage payment. So that's your NOI. That's pretty straightforward. The cap rate is maybe a little more mysterious. It stands for capitalization rate, and it's essentially a multiplier to the NOI, right? So in other words, the higher the NOI is, then the higher the value is, right? So, and it really depends on how high that multiplier is on how valuable investors think that asset is. For example, a building, a nice shiny new building in a nice neighborhood is probably worth more, a higher multiple of income than a Class D in a really bad neighborhood. People are like, I got to put up a lot of stuff, so I'm not going to, that same NOI out of a Class D neighborhood is not worth that much as a Class A building in a nice neighborhood. So this is kind of the cap rate. Now, the cap rate, where you get that is you get this from your broker or from the marketing package. Appraisers use it all the time. It's basically looking at different assets in similar areas and go, what multiple of income stream are investors willing to pay for that? And the cap rate typically is between 5% and 7 or 8%. And because of the equation, value equals NOI divided by cap rate, that means that the higher the cap rate is, the lower the price. So if in the same NOI, you have an 8% cap, right? It's the price is actually lower than the same NOI in a nice neighborhood with a 5% cap. So it's kind of this inverse relationship. So just for example here, okay, let's say you get a marketing package from a broker of any commercial real estate, but it's multifamily because that's what we talk about. But let's say that NOI is $50,000, and let's say it's a 6% cap rate. So the value of that is $50,000 divided by 6%, and so that building is now worth $833,000. So that's how it works, really. And like I said, you get this, the cap rate is the biggest variable. Well, both are really coming from the broker or the marketing packages. And that's really how you value real estate. Now, how can you use this to come up with an offer in 10 minutes or less, right? So this is really the question that you can do that. And the way you do it is you use some rules of thumb. And I mentioned that 50% number before on rental real estate is actually a very similar to commercial, maybe a little higher. So you use a rule of thumb of 55% of the rental income is typically expenses. And what happens is when you get a marketing package, then the expenses are typically understated. Right? So you kind of discard what they tell you and use 55% of the rental income, and that's your probably true expenses. And same thing with the income, right? The income is almost always overstated, right? Because vacancy typically is 10%, but then sometimes in the marketing package, it'll say, oh, it's only 4%. Well, typically it's probably not 4%, especially if you count bad debt, tenants not paying the rent. So the rule of thumb is to use 10%. So the easy way to do it is you just adjust the net operating income by using these rules of thumbs. So I can get a deal in for marketing from a broker, and I can quickly adjust the income and the expenses, get my new NOI, and then use the cap rate and divide that new NOI by that cap rate and get a new price. So this is how I can use the broker's numbers very quickly to assess what is the actual real value of that using that formula we just learned on how to value commercial real estate. That's a really good rules of thumb equivalent to the 250, 70%, but applied to commercial real estate. Now, the question still becomes, well, how do you know you're doing it right? Right? And that is a big question. And so number one, you have to use a good financial model. Ours is called the syndicated deal analyzer. It's probably the most widely used analysis tool on the planet. So you need a strong financial model, but I can make a spreadsheet say anything I want. How do you know the numbers in there are correct? How do you know what the rents are increases? How do you know what the expenses should be? How do you know what insurance should be, right? And so I would submit to you, these are a lot of how questions. And there's a lot of how questions, almost overwhelming number of how questions, especially when you're getting started with apartment buildings. And the better question to ask is who? Who can help you do these things? Not how do I do it, but who? So it specifically does problem of analysis, right? How do you know you're doing it right? Well, what you really need a team. You need a team of who's around you. For example, if I had a team of who's around me, I might have a property manager on my team. And now I can ask that property manager these questions. Hey, what do you think about rent growth? What do you think about vacancy and expenses? Who can help me answer these questions, right? It's the same thing also, well, just from a larger perspective, am I doing analysis right? You might have an experienced advisor or mentor on your team. It's that who can look over your shoulder. And so I want you, especially coming from a single family investing world, the biggest shift, the single biggest mindset shift is this difference between asking, how do I do something? And who can help me do something? So in my mind, I'm always figuring out how. I learned how. It's not that difficult. I can figure it out. But when you get in commercial real estate, it's a little more complicated, and you must leverage your team. Perfect example, let's say you want to raise capital and you're concerned about doing it legally, as you should be concerned about doing it legally. Well, are you going to go to law school for 4 to 8 to 10 years and learn SEC law? Well, no, you're not. That's silly. You're going to hire an SEC attorney. So why, for example, would you want to try to figure out how to manage your own property when you can hire a professional property manager, for example? So what I'm saying is think more along the lines of who, not how. And so similarly, what I'd like for you to challenge you, not only challenging your mindset, but I and my team would like to be your first who for you. As you start this journey into apartment investing, you need to leverage someone more experienced. And that's what we do. We actually help people do their first apartment building deal so that they become financially free with apartment investing. And my team and I want to be that person, that first who on your team. And so if you're still struggling with deal analysis, getting deal flow, not trying to raise capital, but you really want to get into apartment building investing, then book a call below with one of our advisors. And it's a 20-minute call. It's not a sales call. We're just going to ask you some questions about what your situations, what your goals are, and maybe apartments is a way for you if you want to scale your real estate investing. And if so, then maybe we can help you take the next step. So go ahead and go look below, the link below, and just schedule a time that works best for you. And we'll look forward to having that conversation, helping you get to the next level of real estate investing.